So this morning we've had Professor Franco Wong from INSEAD in giving one of our research sessions, and he has been talking about accounting and capital markets. So could you tell us a bit about what does the evidence so far say about whether accounting actually matters in capital markets?
Yes, the evidence is suggests that when accounting reports are released during the regulatory filing to the regulators, the market, the price actually change according to the information that is in the report. And my research basically identify a very specific set of information which are used by financial statement users as an input to their valuation model, and we saw that that specific piece of information is being actually related to how the market reacts to the information.
So some of the things that perhaps concern people is that financial statements are becoming increasingly long and increasingly complex. So would you say the evidence suggests that the information contained in footnotes is actually relevant? Are users of financial statements looking at this information, or are they just only focusing on earnings number, for example?
Yeah, my papers are specifically look into the information in the note. So you're correct that the note has become longer and more volume. But the fact that the research we saw is we look at financial analysts. Those are professional users. They are very sophisticated. They understand both accounting and finance. And we actually saw that they actually use those information in the note when they do their earnings forecast, when they estimate the target price for the company. So what it suggests is sophisticated users are actually using those informations. They know how to sift through the details number to make it something useful. So what it suggests is it's important for users to do that. If users don't, then they may be actually falling behind relative to the professional.
Just a final question. Do you think or would you say that your evidence or the evidence that there is available now in the literature suggests anything about whether this footnote information should be provided in a different way, or whether actually these adjustments that are available in the footnotes should be incorporated into the reports themselves, into the actual figures in the income statement and the balance sheet?
Yeah, this is it's a big debate in accounting profession is how many numbers do we want to put into the financial statements? Where do we draw the line of the number on the financial statement versus those that's put in the note to the financial statements? What we find basically suggests that it doesn't matter where you put it. The sophisticated users are actually looking into them and they use it. And of course, it will be more helpful if we can make it easier for anyone to use them by putting the information more onto the financial statements. Some of the adjustments we look at of how sophisticated users use those informations are actually consistent with recent change in accounting standard, which they are changing the way how information are being reported. A good example would be like pension accounting and also accounting for leases. So more information are actually moved from the footnote to the financial statements.
Okay. So thank you very much. Thank you, Professor Wong.